Welcome to the Upside Journal podcast. The Central Bank of Nigeria is pitching a new regulatory Sandbox 2.0 at the July 30 Fintech Forum. But with the 2022 rollout going completely silent, Nigerian founders are asking, is this a genuine roadmap or just another press release? Let's get right into it.
So, can regulation actually match the pace of innovation? That's the overarching tension we're looking at today. We all know the African digital economy is scaling at an absolutely unprecedented rate. But that incredible growth is hitting a massive structural bottleneck. Right now, founders and innovators are literally being choked by highly fragmented border-by-border regulatory frameworks. They're simply struggling to keep pace with how fast the tech is moving. Which brings us to the core structural issue, Africa's regulatory fragmentation.
To really understand Nigeria's latest moves, you have to look at the whole continental board. Currently, under traditional frameworks, if you're a startup, you have to acquire separate licenses for every single jurisdiction you enter. You're juggling different compliance laws and reporting rules. It creates immense friction. Kwame Opong, the director of fintech at the Bank of Ghana, hit the nail on the head at the Africa Fintech Summit. He said, you're going to go hop, 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 only to get access to a very small market. It perfectly captures the real-world pain point. Startups are wasting precious resources hopping between regulators just for isolated markets. Continental interoperability isn't just a luxury, it's practically survival.
So let's pivot and look inside the CBN's domestic ambition and their newly published FinTech Policy Insight Report.
Nigeria is trying to solve this bottleneck with a major shift. Here is the pitch. The Central Bank of Nigeria is proposing Regulatory Sandbox 2.0. Think of it as a test-then-codify model. The CBN essentially wants to build a controlled live market environment where startups can run pilots for emerging technologies. We're talking AI, regtech, and cross-border payments. The idea is that the lessons learned from testing directly shape formal, proportional rules. It sounds pretty great in theory, right?
And they've laid out this highly ambitious three-phase rollout. Phase 1, which covers the first 3 months, is all about establishing open banking roadmaps. Then we move into Phase 2, spanning months 3 to 9. This is the critical window where they actually launch the pilot cohort for Sandbox 2.0. Finally, by month 18 in Phase 3, the goal is to formalize a FinTech Advisory Council.
But we have to address the elephant in the room, the Sandbox trust deficit.
Here is the absolute core complication of this whole situation: a severe lack of institutional trust stemming from unfulfilled central bank promises. We have to rigorously audit the credibility gap from the 2022 rollout. You see, the CBN opened Sandbox applications back then, and then they just went completely dark. A cohort list was never even published. Founders like Abdulafiz Oguntoyimbo of Isusu Africa were actually told they'd reached the final stage of the process, only for communication to vanish into thin air. These companies were left in total operational limbo.
Because of that history, operators simply can't afford to blindly sign up again. This brings us to the Founders Accountability Checklist. There are 5 critical questions founders absolutely must demand answers to before buying into this new framework. Number 1, who is publishing the cohort list and on what fixed schedule? 2, what exactly happens to a startup's testing data if the cohort stalls again? 3, does this include actual ECOWAS passporting discussions? 4, are there defined exit criteria, meaning is there a transparent, guaranteed path from pilot to full license? And number 5, who exactly staffs the proposed FinTech Reform Delivery Secretariat, and do they actually have the authority to enforce these timelines?
Let's move on to the second major hurdle, the true cost of compliance.
We need answers to those accountability questions because participating in this tightening regulatory environment is punishingly expensive. Take a clinical look at these statutory costs for a payment service bank, or PSB. You're looking at a 1 million naira application fee right out of the gate, then a 5 million naira licensing fee, and the absolute kicker, a 5 billion naira fully paid up minimum capital requirement. Now, while the CBN enforces this to prevent systemic risks, a 5 billion naira barrier drastically raises the barrier to entry. It severely threatens an early-stage startup's runway, especially if they end up stuck in a sandbox that goes absolutely nowhere.
Which leads into external pressures and the regional passporting race.
While Nigeria's domestic rollout has historically stalled out, regional peers are forcing their hand. They are actively abandoning domestic silos in favor of cross-border interoperability. As you can see here, Regulatory passporting under the African Continental Free Trade Area essentially allows a startup licensed in one member state to operate seamlessly across others. It slashes redundancies and massively accelerates market entry.
So what we're seeing is a stark contrast emerging. On one hand, you have Nigeria's sluggish domestic processes. On the other hand, there's immense competitive pressure coming from live, bilateral fintech passporting agreements being forged right now. Nations like Rwanda and Ghana are already moving forward. They are proving that when a jurisdiction builds institutional trust, regional scale is possible without starting the compliance process over from scratch. Okay, so that brings us to the catalyst, where all this collides. The July 30 showdown.
All of these tensions are going to come to a head at the Nigeria Fintech Forum at the Civic Center in Lagos. They're expecting over 1,700 attendees. But the true main event here is the dedicated regulatory roundtable session. Regulators are going to be face-to-face with operators. This is the ultimate test for the CBN to prove they can finally align with skeptical founders on transparent, actionable rules.
Regulation only works when the rules are as transparent as the tech. We are tracking the specific commitments, dates, contacts, and mechanisms that emerge from the July 30 roundtable. Subscribe to the Upside Journal for institutional-grade regulatory intelligence. See you in the next Daily Drop.